We are live.
Hello, everyone, and welcome back to another Stock Talk episode, number 43. Let's go! And we got some stuff we want to talk about today. I'm going to be showing some of the S&P 500 price ratios relative to its history, kind of taking a look at how the market is valued today versus history. And then Jake has a deep report. Well, you went through the earnings of NSA, one of the stocks you've been talking about on the podcast here. And they reported earnings. The stock is hitting 52-week lows. It seems to continue selling off. So we're going to get Jake's opinion on that as a shareholder. You still own shares, right?
Yeah, it is a smaller position for myself, and I'm super happy to update everyone on that later in the show. I also know that BAM, take a drink for those of you who are playing that game, BN reported, correct?
Yep. Oh yeah, so did the corporation. Yeah, I forgot that was this week. Cool.
Dude, that's your stock.
That's the one. That is the one. I actually went on a live stream on Brandon Beavis' channel this week, and we were just talking about like stocks we've been buying, whatever, over the past couple of weeks. He bought Brookfield, and him and I were talking before the live stream started, and I was like, "It's just a beast, man. That company's just a beast." And he's like, "Okay, when I give my reasoning in the future for every time I buy Brookfield, I'm just going to tell everyone that it's a beast, and that's it." It's like, okay.
I love it. And for any new listeners here, if you're on the recording, this is recorded live. We do not edit it after. Again, Daniel Progno, Canada's number one YouTuber, and a nerdy software engineer who most people don't know about.
Yeah.
So come and hang out with us live sometime if you're watching the recording on Spotify or YouTube.
Yes. Okay, I am going to share my screen now and just share some screenshots that I took right before the stream. So these are charts that I like to take a look at every once in a while. These come from Yardeni Research, and they provide all of these charts for free. If you just go and search Yardeni Research S&P 500, you should be able to find these. So this chart right here is the forward price to earnings ratio of the S&P 500 large cap index, sitting at 19.1 right now. If we take a look at history, this forward price to earnings ratio of 19.1 is arguably on the more expensive end. The only time in history where the forward price to earnings ratio got this high was kind of in the 2000 dot-com bubble and then on the way down. And then in about 2002, halfway through 2002, the forward price to earnings ratio dropped below this mark. And it didn't reach this mark again until 2020. So arguably looking like things could be more on the expensive end right now. However, if you take a look at the S&P 400 mid-cap index, the price to earnings ratio is only sitting at 14.1. And if you take a look at history, it's kind of average, maybe even arguably on the lower end of where stocks have been trading historically. And then if you take a look at the S&P 600 small cap index, it is a little bit lower, sitting at a price to earnings ratio of 14 right now. And if you take a look at history, I would say it is below average. So when I take a look at these charts, basically what I'm seeing is the large caps look like they are on the more expensive end. Mid caps look like they are selling slightly below average right now. And then small caps look like they are selling below average. So if I want to find some value in the market, or if I'm looking for stocks that could be research potential selling below their historical averages, then right now it looks like I could find those in the small cap and mid cap segments of the market. So kind of interesting.
Why not SPY 450 or 350 for some of the newer investors here? Like, where are these numbers coming from? And do you ever use this research when buying or selling individual securities? Or is this more so just to get a feeling for the frothiness of the market?
It just helps me figure out where I should be looking for value. The S&P 500 is the large caps, 600 is mid caps, and then 400 is they're just different indexes. One is large cap, mid cap, small cap. So if you take a look at the price to earnings ratios of those, then you can kind of see like, okay, well, the mid caps are trading below their historical averages right now, so that could be a place to look for value.
That makes sense. I like that stuff. I find it to be like a little bit too generalist where there still is like likely value anywhere. So for example, I wonder how that data would look if you took out like the top 10 outlier stocks. So we know like some stocks have been completely surging on the AI craze and stuff.
Mm-hmm.
So Yeah, it'd be interesting to see it like broken down by sector and stuff like that too. I did share that link with the Discord, or sorry, with the live chat here to Yardini. That is a really great resource. I'm going to be checking that out in the future. So appreciate it.
Yeah, I mean, it just gives you an average, right? The index is an average. So yes, I see what you're saying. If you take out 10 stocks, it could be cheaper, but again, it's just an average. There's probably expensive stocks in the mid caps and small caps as well. But the average of the index right now of all of those small caps is much lower. So there's most likely more value there.
Yeah. Yeah. It's super interesting to track that stuff.
Yeah. That doesn't mean there's not value in large caps for sure. I see what you're saying there.
Yeah. I think it's really fun to get down to these small points because I find that I often talk with groups of investors and people that I all give credit for being smart individuals. And you can show this graph to 10 people and get 10 different answers or takeaways from them. And if you give each one the time to study and analyze it, you will see the rational logic line of thought in each of them, which then, of course, confuddles the observer, which would be us, and say, well, if there's so many things you could take away from these, what is the takeaway rather than confusion? And maybe the conclusion on all of this and what we like to talk about a lot here is we are all like different types of investors. So, view it from the lens of which you see fit. But point taken, Daniel, it is really good to be aware of just the general trends, just even knowing where to start looking, right? Like, sure, maybe mid caps might look overvalued or undervalued, but at least that gives you a starting point.
Yeah, exactly.
Not knowing where to look at all.
Yep, exactly.
Awesome. Good morning to all of our live chatters here. Carlos, Captain Strange, Salazadi, sorry I butchered that name, Schwab, Day Trading, Rajesh, David, Investor, Rito, Dan. We are the one. If I am missing anyone here, good morning. It is great to see a lot of familiar faces here. Daniel, was there anything else that you wanted to bring up or go through that you had prepared for us?
Nope, that was basically just a quick showing of where there could be some value in the market right now if people want to take a look at individuals.
So we have a great comment here. No live show without cats. Where are your cats, Daniel?
I had to get up. That's why I left. I had to get up because my cat was clawing at the door, Sal, and now he is sitting on my lap. Needs some attention.
Wow. We're hearing from Jonathan here. Did we freeze? Let us know if we're coming through okay. We don't seem frozen from our end, but if we're frozen to you, that is not great. Good morning, Crispy CIKN. Hello from the Discord.
All right, Jake, what do you have prepared for us about NSA? This is a stock you've been talking about quite a bit on the stream. This stock's been hitting fresh 52-week lows, continuing to sell off. I believe it has a 7% dividend yield now. So what's going on?
Yeah, a bit of history for the chat here. One, none of this is financial advice. I actually own the security. Do not invest on stocks just based on what we talk about in the show. That would be a terrible investing decision. NSA is a public storage REIT. It actually originally got brought up in a Stock Unlock newsletter, which is written by Daniel Prompt. So that's the first time I heard of it. When we brought it up, it was brought up as an interesting research candidate. The stock was falling, but it was also very clear in the newsletter there were some headwinds to this business with debt and impending higher interest rates, things that we'll get into here. I started building a very small position in this stock. I'm not going to go over the entire reasoning for that. You can look into past episodes as to why. It is currently a pretty small position in my portfolio, Daniel. We're talking about 2%, and I've been buying between 1 and 5 shares a week, like literally one at a time, sometimes 2 or 3, into my Roth IRA here in the United States as a tax-free account. So that is the disclaimer out of the way. I do own the security. Yeah, they put out their quarterly report. If we're ready for it, I put together a good amount of research. And then being told I'm getting better, but not great yet at making sure we go through it in a timely manner. So Daniel, please interrupt me. If there's people commenting in the chat asking about this, let me know. We're getting a lot of comments and questions about NSA in our Discord. And of course, as a shareholder, I am doing a lot of research on the stock. So let's hop into it.
Let's do it.
All right. I'm going to share my screen here. And hello, everyone. It's always great to see you. I think we don't normally do these on Sundays, Daniel, but I'm hesitant to say this is our first Sunday stream. We've been going for about a year now. So
yeah, it's usually Saturdays, but Sunday worked better this week.
All right. Well, Daniel, I'm counting on you to keep me on track here. Also, if you did not hear it before and you're just joining the stream, I own the security. If you invest in this based on what I'm talking about here, that's silly. We're not talking about enough information to make that decision. This is just a quick analysis of their last earnings. So you are not meant to read this. These are mostly notes for myself, and I'll let you know if it's worth looking at the screen or continue to sip on your coffee. So This was, what's up?
Go for it.
We are live. Yeah, this was not a great quarterly report for NSA, and I will get into why. I'm going to hit some higher level details, and then we're going to really get into a deep breakdown here. So, the higher interest rates, as we all are aware of, are resulting in higher net interest payments. So, you will see, and what we're going to show is that their interest expense is starting to eat at their profits. That is not something we love to see. They also fell below their estimates for what they thought spring and summer occupancy could be. What a lot of people don't know is public self-storage units are heavily used by moving companies. The common use case is someone moves their house, but you have a couple week or couple month lag period from moving out of the old house into the new one. And moving companies heavily utilize public storage units. Moving frequency usually goes up in the summer, and they cited that the moving frequency they saw was much lower than expected. So they did not have as high occupancy as they saw. They actually revised their previous estimates and lowered them, which is a reason why I think the stock fell a bit. It was trading at about 35-ish, 36 before earnings. Now it's at about 32. So they are continuing to hit new 52-week lows, which of course means that dividend yield is now getting up to about 7%, might be pushing 8 soon.
Yep.
And yeah, much lower acquisition activity. So if you just look at the top level of their report, you don't need to hear this from me. Their net income, $45 million. That was minus 6% 1 year ago. Funds from operation, which is the most important metric for REIT, $82.2 million. We like to look at the per share value there, and that is also down 4.2% relative to 1 year ago. For those of you who are following this company, during COVID, the occupancy rates for public self-storage hit all-time lows. It was a very freaky time in the industry. You will actually see that NSA stock, as well as a lot of other public self-storage REITs, actually all spiked. And a lot of the reasons why they're making 52-week lows is debatably these stocks ran way too much. So they are having numbers that are coming off of that boom, just something to keep in mind. And of the stores they do have, they are actually becoming more profitable. So some things that you won't hear from most people on YouTube or people who just look at the earnings stats is I actually this morning spent an hour of my morning listening to the earnings call. I actually rewinded several parts of it because what they were saying was super interesting. So if you look for the CEO's reason as to, why they're slowing down, higher interest rates, less moving activity than they expected. And also from the acquisition side, they keep on citing that there is there's a lot of space in between sellers' expectations and buyers' expectations. So what you also see in their reports is the amount of properties that they are buying are going down over time. This is debatably smart since they shouldn't be overpaying for properties just because they are expensive, but it's also another reason why their funds from operation growth has not been growing at the clip it was previously because financing is harder to come by and also the deal flow is still constrained according to them. And we are going to dive deep into their debt. The CFO is asked directly about the debt and made very interesting comments on the call. They said their debt is fine. They aim to operate at between a 5.5 and 6.5x debt to EBITDA. That was interesting for me to hear. In terms of how they're viewing their properties and getting more cash flow, they are looking into restructuring existing units, either reconfiguring units within the same stores to have them become more profitable and have higher occupancy rates. They also said that they are willing to sell off properties that might not align or stay up to date with their current investing thesis. I do like that. That is something that they've done in the past, but it's not super common for them. And they said something very interesting that I did not see anywhere in their 10K or 10Q, specifically citing that they have a lot of private equity and venture capitalist people who want in on NSA and their management team. And they are entertaining talks with some of these people where they would come in, give them large cash infusions and become partners with them. That was very vague, so I don't have too much information there. Daniel, this might be a good pause point if there's comments in the chat. The other half of this is going to be actually looking at their financials and taking a deeper dive on their debt, which we've been getting a lot of questions on in the Discord.
No, so this all makes sense to me so far. One thing that I think is going to be very interesting here, and one thing that I've been doing more in my own investments, and I personally think is a good idea for all investors, is to understand the debt maturities of the businesses that you own. So, for example, a lot of companies took on a lot of debt when interest rates were low. If they have fixed interest rates on that debt, then everything should be okay. Should be. Disclaimer there, should be. But if they're on variable rates and their debt has to be refinanced in the next couple of years, while interest rates are higher, how is that going to affect their profitability? For example, my mortgage. I got my mortgage in 2019 at a 2.8% interest rate. It's on a very 5-year fix though. So in 2024, next year, I have to refinance my house and my interest rate is probably going to double. Now, for me as an individual, that is going to lower my cash flow because more of my revenue, my personal revenue, is going to go towards paying my mortgage, which means I'm going to have less profits to invest in growth for my own net worth, I guess you could say. Businesses are the exact same way. So if they have variable rate mortgage or variable rates on their interest or their debt, then their interest payments could be going up. And I've actually seen this in a stock that I owned and I recently sold, Dental Corporation. Their interest payments doubled year over year, which directly ate into their profits and their cash flow. So their cash flow is going down right now. So yeah, definitely something to pay attention to.
Yeah, that was said beautifully. And you also are teeing me up. I have breakdowns.
There we go.
Let's go, dude. All the stocks. If you guys can't tell, Daniel and I are huge finance investing nerds. So some of you guys might be breezing through YouTube and saying, what the hell is going on here? We're looking for other investment nerds. So give this stuff a chance. It might look a little bit scary, but it is really fun to dive into the numbers. And that is what we are doing here. So
yep.
Daniel, another thing, not to butter you up too much here, but one thing I really like about you is you are always very forthcoming and upfront. No one is perfect. I think one thing that really made me love your content is you have made a couple of investing mistakes. We all have.
Oh, big time.
What not everyone has done is been very upfront about that to the point where there's full videos made. You walk through your mindset, you walk through where you went wrong. And it's a very collaborative, hey, let's all like learn together vibe. And it's really empowering. NSA executives, from as far as I can tell, in my personal opinion, are also very forthcoming. They are not sugarcoating anything that's happening here. So for those of you who might be considering investing, you will likely find that in their investor presentation material. So right off the bat here, Daniel, this is a little weird to see, right? So far, everything I've said and everything from management is, hey, look, we're facing some headwinds for the next year or two. Things are going down. But you look here and rent and revenue overall is actually up. And they're not, what I think a lot of companies would do with a report like this is they would try to say, oh my gosh, your revenue is up X% and just really focus on that. And then it would be up to us to kind of figure out that things didn't look so great. They didn't do that. But anyways, revenue's up. Exactly what you said. Look at their interest expense. This is what is spooking investors. And I think it's very fair. This is a little face that was supposed to be with their mouth gaping open, but it kind of looks like a weird donut. Sorry about that. But anyways, yeah, you could see their loss of profitability is directly related to this interest expense. If you line up everything else here, nothing's really moving too much outside of what you would expect. And this is actually what's resulting in the lower net income, which is a big deal. They did have their earnings per share go up because they did buy back some shares, and we'll talk about that too. Anyways, let's keep on moving down here to the cash flow statement. So we can look at our net income. This value looks bigger than the quarterly report because they're doing it 6 months ended, not 3 months. So about double, which is what we're seeing here. And as you can see, this is down. Again, this is from the net interest expense. What I wanted to show is you could look at how much they are paying out in dividends, as well as the amount of acquisition investing activity going on. So you could see last year they were doing a lot more M&A. Again, this company grows by leveraging debt, its balance sheet, and buying cash yielding public storage REIT properties, which in theory create more cash, allow them to pay off debts, a dividend, and create this huge business. To give them credit, they really have done that the past 8 years. So the question is, are they going to continue to be able to do that in this environment? You could see that they are actually taking on more debt. One thing I did not like, Daniel, is they rebought back some shares with that. I honestly don't know if that was the best use of capital there. They're also paying out dividends, and they are taking out debt to start to pay back off other debt, which you can actually quote in their earnings presentation. So I'm going to be honest, man, like I wasn't a huge fan of that. Here we can see, I'm not going to break all these numbers down, but if you wanted to see what I meant by them lowering guidance, they very clearly outlined all of their guidance. I actually wanted to say not all of it was bad, even though the general sentiment here is just not great. If someone lowers their guidance, they're not hitting what they thought they would. All their profitability metrics are going down. In terms of their expenses of what they're spending on admin costs and things like that, and equity-based compensation, those are not going up, or dare I say they are putting it back down a little bit. So at least they're not continuing to massively reward themselves for this type of performance. So that's technically nice. I'm going to keep scrolling through here. All right, so here's all the debt. And we could probably have an hour-long conversation about understanding their debt, which would obviously bore most of us to death here. So I promise we're not going to do that. Daniel, I will say this very quickly, and if there's any questions or follow-ups, we could dive in deeper. For those who want to get a really deep look, they do obviously let you know what all their notes are. So their average interest on their debt is 5.75 interest for the loan they just took out this quarter. Their total debt is sitting at 3.64 million. This is about half of their assets. Again, you want to balance it against that. These are all their notes. I'm not going to go through them. I think this is a better view down here where you could actually view their debt obligations. So as an investor, you need to look at their payments that they have coming up in all these 3 years and say, do you think that they're going to be able to pay these off? Look at these numbers right here. Let's keep some of these in mind. All around 300-ish. We got a big spike in 2027. And just to look at what their cash flow from operations has done, which is how they'd be able to pay this off over the past 5 or so years, is it is actually topping off right now at about 430 million-ish. This is where I am a bit confuddled, Daniel, and where I'll pass it off to you. This is not a huge position for me. I love the dividend yield. The dividend right now is safe. I'm pretty suspect about what the next few years looks like for this company. And right now, this is a hold for me. I'm going to keep collecting that dividend payment. I really do like management. I still think out of all the public storage REITs that this one for me is my favorite in that I believe it has the highest prospects of growth. But if you keep those numbers for their operating cash flow in mind, if they aren't able to get growth back up in the next couple of years, which I think is very possible, by the way, they are going to really start to get choked. Now, they're not going to be bankrupt, in my personal opinion, unless they really change how they manage the business. But I think it is a very real concern that you can question how they're going to be able to continue to grow, pay this dividend, and manage shareholder value with these dividend payments coming up if they aren't able to get growth back into their sales to continue to drive up these operating numbers. So happy to take questions on that in the chat. This is a good reminder for me too, that build your position slowly. I feel very comfortable with this. Again, it's not a huge position for me, and I feel safe holding it, as I said before. But again, this was not a great report. So as a long-term investor, I'm going to look at their next couple of reports, see how they're managing this debt, see what other growth things potentially come up for them here. That is the deep dive.
Interesting.
Yeah.
So did they give any indication on what their priorities are going forward? So we saw that they're slowing down their acquisitions and whatnot. So what are they using their cash flow for now? Is it going to go towards just paying dividends, or is it going to go towards paying off debt? What's the priority?
Dividends, debt. From the CFO on the earnings call, they made it clear that they are looking to restructure a lot of their debt and things like that during this time. So the actions
what are they doing with cash flow? That's restructuring debt, cool. But what's the cash flow going to?
The cash flow is likely going to remain stagnant until they do more M&A activity. They are getting more revenue per unit on the floor, but until they're able to start doing more M&A, and they're not seeing a lot of opportunities right now, you won't really expect to see that go up.
My question is, cash is coming into the business.
Yeah.
What are they doing with it? So with their existing cash flow, what are they doing with that cash flow?
Well, I can re-explain it. We just saw it in the report. Are you asking what they're doing with their current cash flow? They pay dividends, they pay back off the debt, and then they look for M&A activity to buy more real estate.
Cool. Okay.
Yeah.
All right. We had one comment here that said, is net income the best metric for a business like this?
It depends who you ask. In my opinion, for REITs, I like using FFO. That's really like where all their like dry powder comes from. So the net income is more just kind of showing like, are they just managing their expenses well? So I'm not saying it's unimportant, but to me, everything kind of follows the funds from operation. As we saw with NSA, their revenue is actually up, but the management isn't focusing on revenue because that's not really what's driving the return for shareholders here. Their shareholders buy NSA for the dividend and also the prospect growth of this dividend. Again, looking at this company historically, the past 8 or 9 years, they have created a ton of shareholder value. That was also in a time when there was lower interest rates, right? So I personally have belief in this management team, but I think it's a big question mark and something that's very uncertain. in this new higher interest rate environment if they are going to be able to continue to grow. I think they have yet to prove that.
Yeah, so the reason I asked that question about where's the cash flow going is because the business I brought up earlier that I recently sold, the dental corporation, what they were saying for the past 6 months was that they were going to focus on paying off debt. They literally said, our priority is taking the operating cash flow and using it to lower the leverage of the balance sheet and pay off debt. Because what Dental Corp does is they use their cash flow to acquire more dental offices and expand. But with the higher interest rate environment, they were basically saying we're going to stop acquisitions and focus on deleveraging the balance sheet. Then over the next 6 months, I gave them a couple quarters, and over the next 6 months, what I saw was them still using almost all of the operating cash flow to acquire businesses and then take on additional debt. So they very clearly were saying our priority is to deleverage the balance sheet. And then what I saw in the numbers was, nope, their priority is actually to continue growing the business with debt. So to me, I was kind of like, the words aren't matching up with the actions. The numbers don't lie. So I don't like that. And then at the same time, their interest payments were doubling because they're taking on more debt in a higher interest rate environment, refinancing old debt at higher interest rates. So I didn't like that. So that's kind of the reason I got out. So that's why I was kind of asking is, did NSA clearly say this is what we're going to do with our cash flow? And then did the numbers back that up?
Yeah, I don't have an answer for that if you're asking what they promised last quarter. Okay. What I can say going forward is they don't really seem too interested in like paying off the debt. Like they're able to service it. We actually have AD Planet here who's correctly saying like they are paying interest on the debt.
Yep.
So
cool.
Yeah, for them it's just more managing it. What I'm interested to see is more like one-time operations. How good is this management team? So it seems like the business that you just talked about, that management team proved to you that they don't stick to what they say, all that. One thing that I get from NSA management is they're very forthcoming. They don't prance around numbers and try to like glorify things. Like they're very real about the situation. They revised all their numbers, which I think is good.
That is good.
Yeah.
And to be just honest, you know, if your business is going through or if it's struggling or going through a little bit of a downturn, personally as a shareholder, what I would want to see is just be forthcoming and give it to me straight. Don't sugarcoat it. How's it doing? What's the outlook? What are we doing here? And how are we going to manage this? And we have a comment right here that says, NSA, they suffer due to macro, which will change. The dividend seems safe, so I would not be too worried about this business. So basically that comment is saying right now, while the macro is kind of not the best, the business will suffer. But then when a macro does improve in the future, it will probably be back to growing, and basically for a business that's reliant on macro like that, the question is, can it survive the downturn fine and get to the next upturn?
Yeah, they seem fine now. I think it's more about they used to be growing so much, and now investors are kind of like, wait a second, like this stock used to be flying. If you bought it at the peak, you're actually down maybe over 50% at this point. So yeah, people are looking for answers. I think what this person says is very good. Keep in mind, the dividend is totally safe. This is a dividend yielding asset. As the price goes down, the dividend yield goes up. They're going to be able to keep on servicing that. And yeah, you have to decide after looking at the business, do you believe in the management team? I think another good thing for public storage REITs is look at the other public storage REITs out there, which is something I do. Look at how they manage and leverage their debt. Look at how they look at M&A activity. Some traps that you might fall into is people who are overspending on buying property now that they're going to have a very long time to get ROI on, as opposed to companies who are being more patient, having more dry powder. And in my opinion, NSA right now is setting themselves up to do that. They might even sell some properties, like they said on the call, which will be interesting one time. Yeah, it won't be huge expenses, but I like seeing management take the hard choices.
What's interesting is Brookfield is doing the exact opposite thing. Brookfield, so far in 2023, has been the most acquisitive, I want to say, business in the world. But I'm going to not say that for certain. But they have been the most acquisitive private equity business.
Acquisitive. That is inquisitive.
Inquisitive. Okay, sorry if I'm getting my words.
Oh no, I'm just making silly rhymes. Like I'm saying, acquisitive is very inquisitive.
Yeah. Okay. So yes, well, it's just interesting because that business is acquiring at record rates. They've never been acquiring more more assets than in 2023. They've spent 51 billion so far year to date. And they said on their earnings call that while others are hesitant to be acquiring is when they love to acquire the most because they get the best deals. So it's definitely interesting.
Yeah, I mean, there's so many different things you could be buying. Are they buying public self-storage units?
I
I mean,
don't
maybe
know.
this is a good segue to be
I
in.
don't know if they actually have a self-storage segment of the business, but they own office real estate, residential communities. They actually just built a brand new residential community in Calgary. So yeah, they have a lot of liquidity and they like to be buying in markets like this. So if there's an asset, for example, like I don't know if this is NSA's case, but let's say that if NSA had one property that was kind of going through some financial stress and the debt was kind of becoming a huge burden while profits were going down and they just wanted to get rid of that asset, they're happy to take a loss on it. They just want it off of their balance sheet. Brookfield would be like, "Oh, okay. Yeah, that looks really cheap right now. We can handle that debt. So boom, we're going to come in and buy it up at a very cheap price." That's kind of what Brookfield does.
So is Brookfield saying that the prices look low right now when they're coming in? Because what NSA is saying, at least for public storage REITs, is that the sellers are asking very high prices relative to before.
Yeah.
A lot changed
Yeah.
economically in real estate.
So that was just an example. Again, I don't know if Brookfield buys self-storage REITs. I don't think they do. So maybe self-storage is a little bit of an outlier in the real estate sector right now, but in office at least, Brookfield is saying some office properties around the world are dirt cheap right now. And they actually said in their most recent Q2 report that they just put out and their letter to shareholders that they haven't seen a time with this much opportunity since 2008, 2009. Like they're saying that's how bad office real estate prices are getting bad, but for them it's actually good because they're buying. So they said there's tons of opportunity out there.
Yeah, I mean, I'm a little bit out of my depth with this comment, but the office real estate in general is just bonkers. I'm hearing a lot of murmuring around work from home, offices being filled less, the value of those buildings going down, the people who are financing those buildings being tied to like big banks and stuff like that, who are all going to need to like refinance these loans for people who are going to start to like default. People might try to like sell these office buildings, but not be able to get even a price that they were able to get 10 years ago for it. Looking at both the filled rates for people who are like renting, but also of the people who are active renters now, who's actually still going into the office, which is one part of the metric people aren't looking at. So yeah, I don't know who to believe at this point, because there's people saying the worst is yet to come. Some people like Bam are saying like, oh, it's already great. Like, don't wait too long because then you miss the boat. So
the thing is, no one statement will apply to all office real estate. And that's what Brookfield is saying. They have office real estate in downtown New York that they call trophy buildings, which are like buildings that are very high quality and businesses want to be in those buildings. And their reports are saying that rental rates in those buildings are up 8% and they're 99% full still. Whereas they have buildings on the West Coast that are defaulting. So it's not all office real estate is bad or all office real estate is good. It's if you have great assets, then those ones are doing great. And if you have bad assets, those ones are probably suffering. Luckily for Brookfield, they say that about 80% of their office portfolio is very high quality. They actually just sold an office real estate complex in India for, I think it was 1.4 billion that they purchased a few years ago, and they 4x'd their money. And they were getting massive bids from investors over in China for that office portfolio that they purchased. And they got like a 30% compounded annual growth rate on it. So that's what they're saying, is that not all office real estate is the same.
oh yeah, I mean, if we're going all the way over to India, I have no clue what's going on over there. That's
Yeah,
also
yeah,
why
I
I
mean-
buy the ETF for India exposure.
Yeah, there you go.
I don't have the time to learn how this country works, but no, that's a great point, and I agree with you 100%. I mean, real estate obviously comes down to where you're at, and whether we're talking about San Francisco, where you can go read the news headlines, they're all pretty terrible, or India, right? It'll probably be a different market comps. I am learning something from our live chat right now. I'm not sure if you're seeing these comments come in to you, Daniel, about Monish's moves with Bam.
Yeah, I was just going to bring that one up. So KRK says, Daniel, what are your thoughts on Brookfield's big bull Monish selling out of his position? So this is actually very talked about on social media right now. If you go on Twitter, a lot of people are talking about this because Monish had, I believe it was something like 10% of his portfolio in Brookfield, and he's known to only hold like 4 to 5 stocks at a time. So Brookfield was a pretty large position for him. And he was going on podcasts saying he loves Bruce Flatt, the CEO. He thinks that Brookfield is going to compound greatly over time, clearly saying that he was bullish on the long term of this business. And then his report comes out, updating everyone on what he's buying and selling, and he totally sold Brookfield. He's 100% out. And
Dude, stock pumper.
and what he purchased was 2 different coal companies. Not even oil and gas, but coal, which is the resource that a lot of countries are trying to 100% get off of because it's so bad for the environment. Or at least that's what everyone is saying. And then Monish is coming out, and I believe 83% of his portfolio is now in one coal company. So I actually have this coal company up on Stock and Lock. And I have not taken a deep look at this, but this is the company that he bought. 81.2% of the portfolio is an AMR now. And if we go to Stock Unlock, this was a $4 stock in 2020, $4.75. And it is up 37x or 3,750% in just 3 years, less than 3 years now. It's a $2.5 billion company, pays a 1% dividend, has a free cash flow yield of 37.5%, and a price to free cash flow of under 3. So my opinion on this, to answer the question that we got in the chat from Kirk, my opinion is he probably still likes Brookfield. I don't think that he would be disingenuous. That doesn't seem to be his nature. So what I think is he found something that he thinks is ridiculously cheap and a better opportunity. So he sold Brookfield and put the money into something he liked better. That doesn't mean he doesn't like Brookfield anymore. That's my opinion. I just think he likes whatever this stock is more. And when you take a look at the free cash flow yields and everything, I mean, it's ridiculous. If we go over to its financials here, and we go to the cash flow statement, in the trailing 12 months now, this company has produced $1.18 billion in operating cash flow. It then has $223 million of capital expenditures, which means it has free cash flow of $953 million in the trailing 12 months. They've also repurchased $627 million worth of common stock over the past year. And keep in mind, this is a $2.5 billion company, right? So they're buying back a ridiculous amount of shares. If you go to the diluted shares outstanding, since 2022, they've dropped from 19.5 million shares outstanding down to about 14.9 now. So they've repurchased about 5 million. Is that right? About 5 million shares, which is about a quarter of the total share count in just the past year and a half. So that's what they're doing with the cash flow. Also, I took a look at the balance sheet quickly. They have $312.4 million in cash. Current liabilities are under $300 million, so the cash can cover all of the current liabilities. They have no short-term debt. They have $7.8 million of long-term debt and about $800 million of total liabilities, which is also going down. So they've dropped their liabilities from $1.8 billion down to $800 million. So their debt has decreased by $1 billion over the past 4 years using organic profits. So, I mean, this thing at the current moment, it's got a very nice balance sheet. It's producing a ridiculous amount of free cash flow relative to its market cap, and it's returning all of that cash back to shareholders through buying back shares. And they've repurchased a quarter of the shares over the past year. So then the question is, can the business continue doing this? Because when I take a look at this cash flow, it is all over the freaking place. And it looks like in the past couple of years, their cash flow has been going up a lot. But previously, they've had quarters where they lose money. And if you take a look at the trailing 12 months, like in 2020, they were producing $100 million of free cash flow. And then something happened here where it just went up like crazy. Now it looks like it's starting to come back down in the trailing 12 months again. So I don't know if that's a trend that will continue, if the cash flow is going to continue dropping. And I don't know if the cash flow will drop back to a point where it's producing $100 million a year. Because if it does, then the stock actually looks expensive to me, because then it would be trading for about 25 times cash flow. So for me, I can see what Monish is seeing here. It's like at the moment producing a ridiculous amount of cash. I personally don't have the knowledge in the coal business to understand if this is short term or if over the next 5 years this is going to remain. I have no idea. So for me, I'm personally not interested.
Well, you are a very nice person. I'm going to be a little bit more rash than you on this. For those who aren't familiar, we should have said this before. Monish is one of the most famous investors in the world, has definitely earned that title, and historically has been an amazing investor. So whatever moves this person's making are obviously very well thought through. This is not someone that just willy-nilly buys and sells stocks. I give him less credit, actually, Daniel, for moving around in the portfolio like that. I have two different feelings. One, if this person's conviction changed or whatever changed, the wind, the way they woke up one day and they wanted to sell a stock that they were selling to the world 3 months ago, this is what I'm owning for the rest of my life. Not that he was that serious. I get that. And I actually have respect for Monish to be able to do that. However, I also really do question a lot of his motives like around this. I don't actually think he's trying to screw anyone over, but it makes me question what he says more if he goes around, goes on podcasts, talks so highly of BAM and BN. Even if what you're saying is true and he still really likes those, selling out 100% after being so convicted, to me, just raises questions about following what he says 100% in the future. And I don't know, man. Coal is an interesting industry. We had someone in the chat point out they actually might more so be into steel, but
okay.
How many years into the future are you investing if the basis of it is coal? Maybe we're just wrong and coal is always going to be around and we're being lied to about green energy. I mean, maybe that's something to learn more about, but yeah, I'm a little bit more just big question mark on what's going on here, but I guess we'll see it play out. I mean, maybe he'll sell out of this one next month and then we won't be talking about it 6 months from now because he changes his portfolio this often. I mean,
yeah, it's conflicting.
Yeah.
It's also interesting to me because I personally think that Brookfield is still on the cheaper end. Like he bought it and then it didn't really run or anything. It actually started running after their second quarter report because the report, in my opinion, was good. The market seemed to agree. And he sold it before the report. So he probably didn't even really make any money on Brookfield. So that's what I mean is he's someone who doesn't like to keep a lot of stocks in his portfolio. So he must have just thought that whatever stock he ended up buying here was a much, much better opportunity than Brookfield, to the point where he didn't want Brookfield anymore because he thought he would get much better returns in AMR. But then again, yeah, you got to think, could he change his mind on that next quarter? Who knows? This is definitely why you should not follow any investor.
Speaking of not following investors, there was one comment here I wanted to bring up. There's actually two. So I'll show you the second comment. Also, Andrew, great to see you. See your name every week. I'm going to buy BN. The comment before this, and forgive me for picking on you a little bit here. BN has a target of $61, says TD, because of their last earnings. Make whatever decisions you want in the market. I also think that you have obviously done a lot more research than this, so I'll say this more abstractly. Be very careful of analyst price targets, especially when they revise them on earnings. Looking back in time, and we talked about this a little bit on the show, analysts do often just change their price targets willy-nilly to whatever the stock is doing at the time, which generally is following momentum. Now, are all stock analysts bad? No, but just be very wary of numbers like this. We do show analyst data in Stock Unlock, and that is backed by popular demand. There are a lot of investors that like looking at it. And Andrew, I know that this is not what you are doing, but just a general statement to people. Make sure that if you're looking at analyst price targets, it is just a small portion of the research for a stock, because who knows how these people are being incentivized and what they're looking at, or what the price target was before. Maybe they said it was going to go down, and then they're like, oh, it's going up. Jim Cramer style, selling the video at 200, up, it's 400 something now. It's going to triple from here. So that's what Wall Street will tell you.
Yep. I'm just looking through the comments now.
Yeah, we have a lot of good ones. Daniel, I'm going to very rudely leave you alone for about 60 seconds, and I'll be right back.
Okay.
The joys of doing a live show.
Daniel Workman says, great analysis of the BN video. Thank you, Daniel. I appreciate that. More thoughts about BN and Monish selling. David says Monish sold prior to earnings as well. Yes, he did. Definitely did. There was a good comment here. Sorry, I'm just looking for it. There's a lot of comments about this. David also says their recent free cash flow was over $1 billion. If you exclude their recent explosion in their free cash flow, it was average of $60 million. Yes, exactly. Also, they do guide for about $400 million in free cash flow this year, which would put the company at just over 6 times cash flow. So lower than the 3 that it's currently selling for, but still a pretty low price to free cash flow. On a free cash flow yield basis, that's probably, what would that be? Around 20%, just below 20%, probably around 16. That's a lot of cash flow. Then we have some more comments down here from Pardeep. Great insights right here. They have 331 million tons of met coal worth around $500 billion over the next 15 years or so. That's a ridiculous number. So if they can sell all of their
that one.
So if they can sell all of their coal, that's pretty ridiculous. India consumes about 24% of AMR's met coal. So Monish, I believe Monish is from India. Someone fact check that, but I believe he is. So he may have some sort of insight there as well. If India is consuming 24% of AMR's coal and India is growing like crazy, then maybe that's something going on there. And then Goth also says AMR is producing metallurgical coal for use in steel production. They don't do regular coal. So their coal basically is to produce steel. And if India needs more steel with the growth of the economy, then that could be the play right there. So yeah, maybe that's what's going on. Maybe there is a long-term runway there for AMR. I would just need to do a lot more digging and try to understand this whole situation. But maybe Monish is super bullish on that.
Yeah, no. Fun fact, he was born in Mumbai, India on June 12th, 1964. So we missed your birthday by 1 month and 1 day, Monish. We apologize, and we will definitely get you next year on Stock Unlock. Give you a happy birthday.
Yeah. Yes. Okay. We Are One says, analysts usually seem to be more reactive than productive. Yes, if you really want to, you can just start your own little notepad of all of the analyst price targets that they put out on even a stock like Tesla. Just go and watch one analyst make their price targets and when they update them and what those updates are relative to what the stock is currently doing. When the stock is going up, analyst price targets will go up. When the stock is going down, their price targets will go down. They tend to be very close to what the stock is currently doing, which is why personally, I don't pay attention to them at all. They literally hold zero weight to me, and I do not factor them in whenever I do a stock analysis.
I've been thinking about this a lot, Daniel. I think that stock analysts over the years, the importance of them to investors has shifted. If you go back in time, the data availability to investors was a lot lower. You could even go super far back in time to before the SEC was even a thing. And it was really funny because dividend payments by companies were almost viewed as a way for them to prove that they did have cash flows. If this is going really far back, way before we were born. But anyways, in today's day and age, when we have websites like Stock Unlock, there is a lot of digitalization of all the financial data coming in through all the SEC filings. The question I pose is, I'm not saying all analysts are bad. I think some of them might be good, but in present day, in 2023, I think that their importance and the weight on their word has diminished a lot. And credit to what you're saying, is proven time and time again that they're wrong. So that just makes me ask myself, and you do the same, well, why look at it at all? And at least for us, our opinion is be aware of it. Try to validate other people's viewpoints that you might be missing. There's a lot of value there. They could be right, but it could be viewed as foolish just to blindly follow them, especially because you could have 10 analysts on the same stocks and they'll all say an array of different things. Some will say buy, one will say sell.
Now we have a comment here that says analysts need to drive sales. A hold recommendation does not make money for them. So in general, it's just better to ignore them.
Bad incentives, bad outcomes.
Yeah, Pardeep is also, this is in relation to AMR, the Monish per buy. By 2040, India's steel production will be 240 metric tons. And then by 2050, it is projected to be 380 metric tons. So, I mean, that's a lot of steel. That's
Dude,
a lot of steel growth.
how do we sell 380 metric tons of stock unlock subscriptions?
I don't
That's what
know.
I want for 2050.
I like Pardeep's comment. It seems logical, and I will look for research on this. Yeah. I think this is what a lot of people are going to do after this Monish buy. I mean, I took a look at AMR. I definitely see the value there. I see why he's buying it. Again, my questions are just, is this going to sustain in the future? Or is it going to drop back down to historical levels? That's really where the research for me would be, is trying to understand what is the long-term potential of the stock. Ali says, if a stock analyst gives a bad rating to a company whom they are affiliated with, they may lose a connection they have with that company if they give a bad rating. The incentives are also wrong. I never even thought about that.
Isn't it a Charlie Munger quote, show me the incentive, I'll show you the outcome? Or am I just making that up? Someone said
that's
that.
true. Yeah, that's Charlie.
Yeah. This is very true here. Thank you for all this. I'm learning a lot. Someone also made a comment too, Daniel, as I was coming back from a very quick bathroom break, honestly, that there was like 500 billion of coal deposits or something for AMR to go through. Did I hear that correctly? Because that number is ridiculous.
Yeah, I mean, there's also a oil and gas producer up in Canada. I believe it's CNQ, Canadian National Resources. I don't know what the exact number is. I'm throwing this out as just a generalization, but I believe they have something like 50 years worth of oil and gas that they're sitting on, which is worth hundreds of billions of dollars, and they're just slowly extracting it and selling it. So if oil sticks around and if oil prices remain high, that company has 50 plus years of making billions of dollars in profits left, which is ridiculous.
Whew, yeah, the future is wide and ambiguous. I get very confuddled and am not able to see what energy will be like in the future. There's so much murmuring now, and there always has been, of, oh, we're going to have like unlimited energy or all this stuff. And sure, we've had the debate before. Like, I don't think it's going to go like to zero, but it's just so big and wide open. I think one of the best predictions I've heard is that there are going to be new energy sources, but since the energies that humans consume is constantly going up, it's very unlikely that like a new energy source will just replace everything. You have to think, of course, there's huge infrastructure that supports all this that just doesn't change overnight, right? So they view the new energy sources coming into the market as going towards new energy needs and things like that. And it will be a very long time, again, citing other people's predictions, for even coal, oil, things like that to ever fully get phased away. Debatably, they will never fully go away.
Yeah.
So come up with what you may, try to, put on your tinfoil hat and see the future there.
Canada recently announced that they're going to be investing more into nuclear. I forgot about that. Yeah. They've been putting out press releases saying that they're going to start investing into more nuclear and building nuclear facilities and whatnot. I think that's great. I think it's a great call. I think the world needs it.
I love it. And if you guys are enjoying this discussion, guys and gals, excuse me, I just dropped our Discord link. Most of you are probably already there, but it is totally free. Tons of stock nerds there talking about stocks. And Daniel and I hang out there as well.
I do have one question here from We Are One. They're asking me, sorry, I'm going to find your original comment. Daniel, I would love to hear your thought on the 15% tax on dividends on U.S. stocks for Canadian investors. Is it worth paying for the growth on a stock? Yes. So if you are in Canada and you own a U.S. dividend-paying stock, you are taxed an additional 15% on your dividend income, which is big, especially over time.
Does that go to the Canadian government or U.S. government?
I believe the U.S.
Let's go.
It's basically like, hey, we don't want our money leaving the country, so we're taxing you on it.
Hey, welcome to big world governments.
Yeah, it is what it is. All you can do is play around the laws, right? Or not play around the laws, but how can you benefit the most? Whatever, avoid
That's what
taxes.
We can legally say here. Yeah.
How can you legally avoid the most tax? That's your goal.
You heard it, folks.
Yeah. So in Canada, the only way you can get around paying this U.S. withholding tax is to put the dividends in an RRSP. if you have that stock in an RRSP, I believe you do not pay the tax on it. You say here, I do not have an RRSP and only have a TFSA. So you will be taxed in a TFSA, and an RRSP you will not be taxed. Personally, this is one of the reasons why I like Canadian dividend stocks, because I do not pay this 15% tax. And I actually got in a little bit of a debate with someone the other day saying that I was too invested in Canadian stocks, because if you look at my portfolio, it's the majority is Canadian.
Too many bank stocks. What? I'm just playing.
Okay. Well,
How did the argument go?
Well, if you take a look at the Canadian index versus the S&P 500, it's clear S&P 500 outperforms, it grows more. However, this will actually go back to your first comment in the video. Just because the index has not performed well in Canada does not mean there are not great growing businesses in Canada. And if you take a look at the Canadian portfolio, or sorry, not the Canadian portfolio, the YouTube portfolio on my YouTube channel, it is outperforming the S&P 500 so far quite a bit, and it's mostly Canadian stocks. There are some great Canadian compounders, great Canadian dividend growth stocks, in my opinion, that will hopefully outperform the S&P 500. So I don't like to generalize too much, you know?
Give us the "Let's Go Canada" chant. We all want to hear it.
Let's go. I'm a big,
the Great White North.
I'm a big bull on Canada. I don't even know how that started.
You said that you got into a fun debate with someone that said that you were too concentrated in Canadian stocks, and people might predict what I'm about to say. And it's one of the reasons why we started Stock Unlock as stock investing nerds in our infinite wisdom or stupidity. So we'll find that out long term. We really believe each business is unique. And I love what you're saying here, Daniel. Every business has a different set of management. They have different sets of products, people working at them, profitability metrics. What is their moat? What are their growth prospects? How long have they been around for? Blah, blah, blah. We can go on. And that's what makes this fun. It takes a decent amount of time and work to really analyze a business to where you feel comfortable about it, can explain it to a 5-year-old. Websites like Stock Unlock make that easier. But at the end of the day, the opportunities are there for the people who have the time to do the research. And we'll see if you're right long term. But it seems like a lot of your higher conviction plays that you have put a lot of investing due diligence into, avoided mistakes you have made in the past as you gain more armor and wisdom from your past mistakes. They kind of seem to be playing out. So not that there's one available. If there's a Daniel Cronk ETF, I would consider diversifying, a single digit percentage of my income into it if you had a fair enough expense ratio for your buddy Jake. But that does not exist yet today.
We'll see. Maybe one day.
I can show something really cool to people that we're working on in Stock Unlock, since I think most of us are Stock Unlockians here.
Jake, just one quick comment.
For sure.
What I've noticed in my own holdings, and so let me back up.
All right.
When I went to the Toronto event, the question that I was asked was, what are the main metrics that I look at now when I'm investing in businesses? And what I've noticed through my holdings now is my largest positions all have a very high insider ownership. So for me, that's something that I seem to have subconsciously valued highly when I research stocks now. Because when there is high insider ownership, the insiders typically do not dilute the shareholders, and they really protect shareholder value, and they're focused on shareholder value because they themselves are the largest shareholders. So if they're going to dilute the stock, they're the ones being the most affected. If they're going to do ridiculous amounts of stock-based compensation, which dilutes the stock, again, they're going to be the ones most affected. So what I've noticed is high insider ownership naturally seems to provide shareholder protection and shareholder focus. And those are the stocks, those are my largest positions now. Brookfield, Alimentation, Constellation, stocks like that.
I agree. Also founder-led businesses as well. A lot of times that actually comes together. One thing I like to say, well, I'll repeat myself from before. Show me the incentive, I'll show you the outcome.
Exactly.
That might would, of course, but that comes in line here, right? If someone's a shareholder of the business, as Daniel's saying, they're probably going to treat themselves well too. And then founder-led businesses as well, I also think are great. I've honestly been getting really into looking for those stocks in more smaller cap names. I find that those businesses are a little bit easier to understand. Sometimes they're often overlooked, and you can find stocks where Their financials seem hit or miss. Like it might have around a 3 insight score on Stock and Lock, but it's because they're either investing into growing out, future distribution, product lines, things like that. And it's just so exciting to find those companies. But like you're saying, when you see it's owned 20-something plus % by insiders, you're like, okay, well, they believe in it and they work in this thing every day, right? And it's just humans moving around, pushing buttons, making things work.
They're highly incentivized to protect shareholder value when they're the largest shareholders. That's really what it comes down to. And then it puts them in the mindset of being a fellow shareholder. So you as a fellow shareholder are probably going to be protected by them. But yeah, I like looking at those small caps too. I actually found one that I will not discuss. There's just no way I'm going to discuss it. Or its name, at least. But I wanted to buy it, but the stock has such low volume that I put in an order for, I think it was like $1,600 worth of the stock, and it didn't get filled. And it's been a week. That's how little volume there is. So
is it good till cancel order?
Yeah. And it's just not getting filled because there's literally no volume on the stock. But
did any trades go through, or is it just not going through at the price that you wanted?
It's not going through at the price that I want. There's 500 on average, 500 shares traded per day. And it's like an 80-cent stock, so $400 worth a day.
Hold up. I'm gonna push your buttons here a little bit. I'm gonna reword what you said. You're just not willing to pay the market price for this security because you're cheap. No, you're actually a good investor, but that was fun to say. But so you're waiting for it to come, but there is volume being traded. It's just not, you're not finding any sellers at the open price you have your arms stretched out for.
Let me put it this way. Let's say my order is $1,500 and it trades $500 worth of volume a day. It would still take 3 days for me to get filled at the average volume.
So here's a question for the flip side, and this is more so for the viewers. This is something I think about as well. I have my own answer, but I'm curious how you will answer this. There's a flip side to this as well that people get screwed on, where you can get into these micro cap stocks.
Exactly.
It surges 400%. And you're like, woohoo, like I'm going to go sell my shares. And you realize everyone and their mother, who are the 10 other people that own this stock, are also going to sell their shares. And there's no market clearing or anyone that wants to buy them at that price. So what is your mindset going into this, knowing that it's hard to get in, it's also potentially hard to get out? Does that influence how much money you put in or how you view this investment?
No, you definitely have to consider that. That's why there is simply a 0% chance I will ever say this stock's name, because when you have such low volume like that, it's an additional risk that a lot of people will not even consider, right? I mean, think about it. If I purchased $100,000 worth of this stock over a month, and then the stock drops 50%, it would take me a month to get out, if not longer. Like, that would be me selling for a whole month. So
I think it would be longer than that, because you'd be asking for too much, and people would be selling it, but not up to where you you
exactly
want to let it go.
So you definitely have to, if you're going to buy illiquid stocks, you have to think about an exit strategy as well and factor that in for sure.
Yeah, it's really, really fun. And I totally respect your decision there not to say the name of that stock. I think we both have one of those now. I actually piled in, it's close to 10% of my portfolio from how
you're ridiculous. Jacob, you're nuts, man.
Well, what's great, and I think one of the reasons why people like listening to us, hello to the live viewers, by the way, we love you guys. We both love investing, but we have slightly different styles of investing. I'm not going to buy stocks for like months, or I have things I generally dollar cost average into. And very randomly, you'll hear me say one day, I just threw like X% of my net in this, like, boom, done. You'd be like, whoa, like what happened there? I think you are a lot more liquid in terms of like you're buying and selling on both sides. And it's very driven, obviously, by the fundamentals of the business. We hear you talking about it all the time. And I think like we'll see how both those work for us. I think the most important thing is just like you and I are staying within our circle of competency. For example, like you love BAM and BN. I am so happy about you for that. And I have been very clear with that. Like that is the type of business where I personally have trouble understanding it. You don't. But like that for me, then I'm very happy watching you and like 80% of our Discord like talk about that stock all the time. Like, you know what? It's not for me. They might make money there. But at the end of the day, like I need to go to bed every night feeling comfortable what I'm holding. But yeah, for the small microcap stocks, we just can't talk about them. It gets really weird with the SEC. Daniel and I are not stock pumpers. We don't sell trades. We are just investing nerds looking to honestly meet other people in the community and form some community while we're at it.
Yeah.
But yeah, we've been live for about an hour and 4 minutes now. Normally at the end of the stream, we just have some more casual chat, which is what's happening here. If you have not yet, throw us a thumbs up. As Daniel said on the last stream, there's 77, 80 people in here. We should have 77 or 80 thumbs up. Give us some support. And thank you for letting us know how the show's going. We're getting some good comments here.
Jake, I cut you off earlier. Were you going to show us the brokerage linking or something?
Oh, no, even better. Okay. For all of you on Stock Unlock, here is a private unreleased feature that I am working on that will be released this week.
Let's go.
Fresh feature drop, private on the Discord.
Okay, go for it.
What's really fun, Daniel, is you're going to kind of see things in development, and I'll even like show you how it's not like fully working yet, which like I kind of find funny, but whatever. So we get a lot of comments about viewing and comparing things to other stocks. So what you're seeing here, if you're familiar with Stock Unlock, you might say, hey, Jake, this doesn't really look exactly like the stock chart that you see on stockunlock.com. As we can see here, we have the controls on the top. If you go to max view, you can only drag 1 year at a time and it kind of bounces. It's pretty good, but we can do better. Presenting our new stock price graphs. So this is very underdeveloped and not done yet. As you can see, as I mouse over it, everything says NSA. Obviously, that's not true. I literally just have not written the code mapping to get that in. Daniel, please stop me if I go on too much of like a nerdy thrill here. We are now allowing any segment of dates. We are not snapping it by a year, and you could type in as many stocks, as many ETFs as you want, compare them percent change, easily flash to 3 year, 1 year, 1 month. It is bananas. People are going wild. This is dropping this week, and we are never, ever going to stop delivering you awesome, sleek technology. And the code underneath it, it's pretty fire too, even though that's mostly for the engineers. Speaking of, and then I'm going to rest my case here, we are hiring for a senior software engineer role. If you want to work with us and work alongside me, build some awesome tech, some pretty complicated underpinning code to power all these financial graphs, hit us up. Reach out to us. Drop a comment. We want to talk to you. We are currently interviewing.
Yeah, those graphs look great. I really like the when you show percent change, it always starts from 0%. So then even if a stock is $20 and one is 100, it will put them both at 0%, and then you can actually compare the percent gains on both stocks, which I love. We should add that to the freeform tool.
It's so funny having these conversations where like I know the technical reason as to like why things are easy and hard, and it is so challenging not to go on a mini rant about how sad it is for me of how hard that is to do in the freeform tool. But it will come. It's just a matter of what we want to prioritize here. We have pages and pages. We have internal documents, folks, of 13 plus pages, size 12 font, single line bullets of feature requests from all of you. It's a good problem to have. We are unable to meet the demand for the software right now in terms of software supply. We are constantly working on meeting that demand. And honestly, we're going to get to it. Good things take time. Rome wasn't built in a day. And yeah, Daniel, as you said here, everything's always based from zero. So whether you wanted to look all the way out, some of these stocks didn't even start trading this early. So as you can see, one of them is 0%. Please ignore that this is not fully coded yet, which is obviously why the labels aren't there. But yeah, I mean, here's even one good takeaway from this, Daniel, right? So if we're looking at like the past 5 years, this is one thing I noticed for NSA. NSA is currently down, or sorry, it is rather up the least. They're all up, but NSA is up the least. But what's really weird is it peaked the highest. So at one point, NSA had grown the most out of every single public storage REIT stock. So these are the kind of things that you can look at here. Now, it would be foolish to make an investing decision just saying, hey, this one out of the bunch fell the most from its highs. That means it's going to go up. That's not how stocks work. So please don't have that be the takeaway. But as you build up your investment thesis, looking at tons of these data points, little ones like this can help add to whether or not you think it might be a good or bad entry point for particular stocks. I love it. I cannot wait to drop this one. If you are not in our Discord yet, that is where we announce a lot of these features. Maybe that one will even be an email. We'll see. Those are the special ones.
Maybe. Mark says Jake is really enjoying adding new features.
Who, me? Liking to code? Come on.
You can't tell?
Never. Honestly, dude, that's well, I don't want to say issues. One of our biggest opportunities with Stock Unlock is we're like really undiscovered. Like we have
Yeah.
not had that many people sign up. We're getting like under 1,000 web views a day, like actually in the hundreds of clicks. I think that we're getting around 25,000 accounts created all time. And if you look at our subscribers, like our numbers and conversions are good. It's just about getting to people that know we exist. So I've been summarizing this as we are great at product and engineering. People love our product. We have a lot of great fans. Thank you so much for everyone who comes and supports this show and watches us, especially if you subscribe to Stock Unlock. But admittedly, Daniel, we have not cracked the nut yet on growth marketing, which to me it's a matter of when, not if. But yeah, we love hearing ideas from our consumers as well. If you're seeing people talk about us on Reddit, if you think that we should be in social spaces where we're not, or there's opportunities that we might not be aware of to help us grow, throw us a bone.
Yeah, we also just launched. We had a question earlier about the portfolio linking. So that is now live too. You can link your portfolio to Stock Unlock and track it automatically in Stock Unlock. So no more manual updates unless you want to do them, of course. But yeah, no more having to manually update your portfolio, which is great. Unfortunately, I'm with TD Bank in Canada, which is not supported yet. It will be though. And when that is supported, it's going to be awesome for me. But currently it's awesome for a lot of other people, which is still great.
Nah, poo poo. Works for me, not for you.
Yeah.
See, little does Daniel know, maybe it could work for him, but I just wrote one line of code where it's if email equals Daniel Prunk at Stock Unlock, throw an error. I would never do that to you.
Yeah, sure.
I hope no, that would be very rude.
Yeah.
One thing I was going to mention there. So the top brokerages that we are getting requested: Quest Trade, Interactive Brokers, TD Canada, E-Trade. These are all coming within the next couple months. So if your brokerage is not supported, please be patient. We are working with SnapTrade, and they are constantly adding more brokerages to support. And obviously, yes, we are working very diligently to get to as many of those as we can.
Yeah. So more will come over time.
Yeah. Okay. I actually think I need to head out soon. So
yeah.
You saw I've been working on this feature all week. I'm actually going to be in a park today with some of my friends, which should be fun. If anyone else in the chat wants to share their Sunday plans, let's get to know each other a bit. Let us know what you are doing. We'll probably start to drive this towards a close. Daniel, what are you going to be doing after this call? It is a fresh day out there in Canada, 2 hours before New York. It's not even noon.
I am going to edit the video that I recorded, because I recorded a video on Friday, I believe. Yesterday was hanging out with friends. And then today I'm going to finish that editing. And I'm probably just hang out with Shelby and the cats.
Tell Shelby I say hi. Sneak peek. Hopefully we can find a time for New York fall. I'll just say that. We are getting a lot of interest for a New York meetup. We're thinking about it. We're going to see what we can do there.
We need to find a time where I'm going to come to New York too.
There's only do one thing at a time. Present moment us will enjoy Sunday. I will be thinking about that moment that just happened now, and that we can't cut it out because it's a live stream. That was embarrassing, but I can speak English, I promise. We are one. Thank you so much for another great live stream today. You are welcome. Thank you for joining us. Good question here from Carlos on Stock Unlock. How long will it take to have the latest earnings and financial data? So exchange, market to market, this changes. Typically for main U.S. stocks, it should only be about 2 to 4 business days. We have seen it take up to a week for some. If you're looking at international markets, those could lag a little bit longer. What FinHub does is they have real humans translating the SEC filings to GAAP reported financials. If there are any stocks that are lagging more than that, please reach out to support. It's not common, but we have seen a couple cases where they do lag, and we have a direct line of communication with our data provider to make sure that you can get the freshest numbers in Stock Unlock. That is always our intention. We have a no tolerance policy for data quality, data accuracy, etc. Anything else, Daniel?
Nope. That was perfect. I should get that video done, though, so I can log off and hang out for the Sunday.
Have an amazing day, everyone. If you are just tuning in, this is the end of live stream number 43. Why do I keep on saying Canada's number one investing YouTuber, and some person you've probably never heard of, me, Jake, with a background in software engineering, talk about stocks and build stockunlock.com. Thank you so much for hanging out with us, and until next time.